Hello everyone, welcome back to the channel. In today's video, we are going to break down SOFI, one of the most popular Twitter names out there. Their fundamentals are absolutely solid, their growth story is real, they are growing by quite a large margin, but that is exactly why I created this channel. You can find a million posts and 1,000 videos on YouTube telling you to buy SOFI, buy it at 17, 18, 19, $20, whatever you can get, and just hold the stock for the long term. But my question to you is, if the stock was really that great, why is it not already at its all-time high? So I'm going to walk you through some key levels today where I think the stock can retrace to, but understand that getting a good entry is as important as finding a good stock. Because if you entered at $14, you only need to get to $28 to double the stock. But if you entered at 18, we will need to break the all-time highs and we'll have to continue higher for you to capture the 100% gain. So it's very important that you understand the technicals on this chart. So with that said, let's get started. Let's figure out where the chart has been and where is it going. I'm going to draw two accumulation ranges on this stock, which I think you should highlight on your charting as well so you understand what was going on in the past. Obviously, from the time it IPO'd, the stock pushed up. It happens to all the new IPOs. You just want to stay on the sidelines in the first year or two and let the IPO crash down to understand what the real value of the stock is. So at first, SoFi was accumulated between $4 to $6 area, and then we broke out. Then we created another accumulation range where the market tried to make a higher low. We swept this level, created a nice bottom formation, and started to push up. We came all the way back to retest that previous support. Let me mark that as one of the pivots. Let me draw this line right here because this is where we saw some rejections here. Then we got rejected here again, and then we got rejected here with a large candle. Another rejection, and then we finally came back to retest that level. And that is good and that is healthy. If you were watching SoFi back in 2025, this was a good place to enter the stock for the next leg up. Another pivot I want you to see is this exact area right here. We got one rejection here after IPO, second one, and then a third one. I'm going to create another line just so we can turn this into a zone rather than an exact number. So anytime we got above this line, we wicked into it, found sellers, and then rejected back down. Notice that down the road in 2025 again, when we pushed up into this price, we got rejected once more. But then we finally found the strength. We found the buyers to push this above the highs. We came back again to retest this level. We pushed back up again. We realized that we do not have enough buyers to keep this stock going. So we finally rejected and got below the previous pivot. Once we rejected this area, we did not come back to test it. And this is my biggest problem with the stock. It is very straightforward and very simple. I want you to understand that we have a massive rejection zone between $23 to $24. So if you do purchase this stock at $17, $18, your only upside is about 32%. Are you really willing to put your money into a stock that has a lot more downside because it's a growth stock? Because if, for example, SPY pulls back 10%, SoFi is going to get hit. SPY pulls back 5%, SoFi is going to get hit again. Growth stocks are sensitive to the market volatility. So if you're going to invest into a stock like SoFi or Uber or Palantir, you should hope for a lot higher prices, a lot higher percentage gains than just a 30 to 35% gain. Because most likely if we do push up here, we're going to get a rejection at 23, 24 and then consolidate, come back low, do something, and then maybe push back up. But that will take a very long time for us to consolidate and finally break out because this zone is pretty darn solid. So just to start with the technicals, this is my biggest problem right now. That is why I cannot justify entering SoFi with the risk reward that I'm seeing right now. The second thing is, I've talked about this in my previous videos. Double bottoms are unforgiving. Anytime you see a double bottom, let me zoom in here. Just know that market is going to take that out down the road because that is the perfect place to hunt for stop losses, and institutional investors drive the price down lower to take these stop losses out, create larger positions here, and then push the stock back up on the opposite direction. So anytime I see a double bottom, I am not a fan of it. And let me give an example of a double bottom. This double bottom on HIMS, price was up here between 55 to 65 when I started to call this number. I was like, 24 is going to get taken out. If not today, it will get taken out down the road. And that's exactly what happened. So if we go back to SOFI, I personally believe that if anything, for the least, we should be able to take this level out, and we're going to slide below $15. If not today again, maybe in a month or two or three. So with that said, we don't have enough upside to go long on this stock. And secondly, we have a higher chance and a higher probability of coming down below this level before moving back up. That is scenario number one for me, that we just sweep this level and reverse back up. But I personally think that we could slide lower than that. One of the reasons being is this 200-week moving average. I think most likely SoFi would like to retest the 200-week moving average. I've noticed some of the other stocks that have done that recently. If we look at Oscar, we've done that with this stock as well. One of my favorite trades that I took this year. If we look at Zeta, we have come very close to this 200 weekly moving average. So what I'm saying is that there is a trend that growth stocks are looking to retest this level. So that is one of the other reasons I think that we might be able to flush this stock below $13. And personally, when I think about a stock that is growing so well, growing at such a high margin, if I can get that on depressed prices, we don't really have to wait for those slow accumulation and slow turnarounds. If a company that is growing comes to a level where it's a total no-brainer and the risk reward is absolutely skewed to the upside, that's where you'll buy, and the stock will most likely just reverse back up very quickly. So my plan here is to take a position into SoFi under $13 or closer to $13, and from $13 to $26 where I double my money. If I can get that price, I'll probably exit about $23, $24, but I don't have to wait and see what happens to the stock when it goes to $36 or $40. All I had to do was just sit on with patience, wait for good key levels, and I will say this, it might never get to that level, but when you look at the risk reward, it makes sense to wait for that level. The next thing I want to show you is the fib level. If I draw a fib from the previous swing lows to the highs, we are looking at $14 level for the 78.6%. If we get a 78.6% retracement, we'll be sitting at about $14. And all I really need is a wick lower towards $13 where we test the 200 weekly moving average, and right there would be my entry. I'm not going to wait for a candle closure. I'm just gonna scale in all the way down. No stop loss on this stock. I will just sit on the sideline for a week or two, see how the weekly candle develops, and decide if I want to hold it or not. Worst case scenario, I take a 10-15% hit on it if it continues lower. And I always say the downside possibility even on a stock as good as SoFi, because you never want to get blindsided when you are investing your hard-earned money. So to summarize this, we got two great accumulation ranges, broke out, retested, broke out to the highs, rejecting a key level here. So now either we're going to push up from here, reject, and then come back lower, or we're going to do what I hope we do, and that is flush under 13, flush under 14 level, and then reverse back up. And I will be exiting this stock right around 24 to 25, not going to be sitting on it for next year or two. Most of my trades, when I find these key entries, I'm out within 2 to 3 months, and so far I have a pretty good streak at hitting between 80 to 130% winners. But I do have to say those types of trade require a lot of patience. So if you think you always FOMO into stocks and you do not have the patience, you can follow my channel and I'll walk you through the charting part of the trading or your investing journey, because you'll get a lot of fundamental videos from other creators, but very few people can understand where to precisely enter. This is literally like doing a surgery, like doing a precision surgery, because when it happens in real time, it's literally like watching magic, and it's beautiful, you know, doubling your money after being patient for so long. So with that said, I hope you found value in this video. If you have a ticker you want me to review, please drop it on the comment. subscribe to the channel, and thank you so much for watching. I'll catch you in the next one.